The bottom of the cycle is always it's a scam, it's a Ponzi, all the media hates it, everybody throws shit at each other online, everybody's looking for blame, looking for scapegoats. We are exactly in that point now. It is ugly out there. And that ugliness out there is a real measure of where we are in the cycle. So we're at the despair and anger phase. And then we have the acceptance phase, which is the boredom phase, which I think we've rolled into, where prices don't do anything for a while and everyone starts getting fed up and moves on elsewhere. You can see artificial intelligence is getting people's attention just when they should be looking at crypto as well. Don't forget, artificial intelligence is not really investable for most of us because it's all VC, while crypto is real-time VC that we can trade, which is part of the magic of it. So we're at the blow-up phase, the FTX scandal. Now, I've seen this. I've seen it with Mt. Gox. I've seen it with Bitfinex. I've seen it every single bloody cycle. And this time around, everyone's like, oh my God, it's the end of the world. Yeah, it's every time the end of the world. And guess what? It's not.
Bitcoin's price is up on January 12th, and a swift market-wide rally in crypto prices has some investors hopeful that the year-to-date high at $18,898 is a sign that has bottomed. After a continuation of last week's rally in equities markets, a cooling US dollar index, and positive inflation data in the Consumer Price Index report can keep BTC in the higher end of the $18,000 range. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about his outlook for Bitcoin in 2023. Raoul also breaks down the importance of regulatory clarity in the space and how it will drive the future of institutional adoption in crypto.
In the cycle, which coincides with the Bitcoin halving cycle, is the global liquidity cycle. And that's the central banks creating liquidity for the markets and for the economies. So what they tend to do is if the economy gets too hot, they tend to raise rates, liquidity comes down, they withdraw liquidity from the markets, take away QE. We've seen this several times before. And what happens is asset prices come down because they need stimulus. So once you take asset prices down, what happens is the economy starts headed towards a recession or goes into recession, and the monetary easing comes back again because that's the natural state of affairs. So if you look at this chart here, this is the year-on-year global money supply versus Bitcoin. And you can see they're hugely correlated. Now, what's interesting, you see the tops of the charts, they're all missing because the scaling doesn't work. Because of the technological trend adoption, when you get the rallies, they tend to massively overshoot, even versus where liquidity is. And that extra is the extra trend that drives the markets forward over time. Now, every time we see these trends, the boom and bust, everybody shouts scam Ponzi, but that scam Ponzi phase is actually just driven by the monetary tightening cycle. Now, there is a lot of speculation in crypto, I get that, because there is, in most new technologies, we get that in technology stocks themselves. So right now, we are at the bottom of the monetary cycle. Going forwards, we know the Federal Reserve is going to start increasing rates at lower increments. I don't think they go much further than maybe this 50 now. Maybe they try and eke in another 25 and try and keep rates stable and then wait for CPI to fall below Fed funds rates, which I think happens March, April. So I think next year is a game of dramatically changing liquidity conditions.
A primary catalyst for the rally appears to be the positive CPI report released by the Bureau of Labor Statistics, which showed overall inflation for all urban consumers declining by 0.1%. The drop in inflation was the largest since April 2020. Equities traders are also reacting by driving prices higher on the hopes that the positive data spurs less aggressive Federal Reserve interest rate hikes at the Federal Open Market Committee meeting on February 1st. Investors' confidence in the crypto market could also be rising due to their belief that the United States Federal Reserve could roll out smaller-sized interest rate hikes throughout 2023 due to signs from the CPI report that the Fed strategy is working.
So that's where we are in the monetary cycle. I think we will see inflation fall much faster than people expect, and therefore stimulus will come. And I think the Fed are going to think or look somewhat stupid by about June, where I think inflation it's going to be down closer to 2%. I mean, the year-on-year rate of change of oil prices alone is probably zero right now. And if oil goes to $60, where I think it goes, and we get into March of next year, that was the time from the Russian oil crisis premium of about $120. So oil will be down 50% year on year. That's incredibly negative for an inflationary environment. Owners' equivalent rents are rolling over, and eventually wage growth will start slowing down dramatically. So my bet is we'd probably get negative rates back in the end of 2023. Sorry, not negative rates, negative inflation, 2023, 2024. I think the roadmap that we use for this is the 1940s and 50s and not the 1970s that everybody thinks. So the 1970s was the only example in history where inflation came up, came back down, didn't go all the way back down, then shot up again. I think that was driven by demographics, and the Federal Reserve are fighting an old ghost, and it's not the ghost that they should be fighting. I think the more decent parallel is the 1940s to the 1950s, when everyone came out of World War II, the factories had to retool, so there was supply shocks, and then demand shock of everybody coming into the workforce again. That drove up prices 20%. It was a bigger event than COVID. And then prices collapsed, went negative 2, negative 3% year on year, then rebounded 2 years later. We got a secondary bout of inflation just from the mathematical numbers. The Fed that time around imposed yield curve control because they didn't want to raise rates and destroy the economy. I think we're going to see similar this time. This point is we're at the low point in the cycle. I think inflation is lower. I think the crypto markets are going to be explosively better this time around. We're also seeing a lot of interesting things like the RSIs, weekly RSIs in Ethereum and Bitcoin are right down at levels that have always seen reversals. We're seeing it with on-chain activity. We're seeing it with minor capitulation. We're also seeing it with volatility. The 30-day realized volatility of both ETH and Bitcoin is at levels that always precedes the large rallies and the big reversals. So I've pretty much got everything in place. Is it possible to get some other down leg? I doubt it, unless something can drive bond yields high. And I just don't see that outside of a temporary blip because one of the inflation numbers or one of the employment numbers is skewed somewhat. So I don't see that happening. So I think we are moving higher. I think ETH based in June, and I've said that for several months now, in fact, since June when I started adding to my position.
Another positive sign for Bitcoin price is the cooling US dollar index, or DXY. Historically, when the DXY retracts, sentiment for risk assets like Bitcoin increase. Currently, Bitcoin and the major stock indices share a high correlation coefficient. Therefore, if interest rates ease and the economy grows, Bitcoin could continue to rally with bullish equities markets. The better the macro climate, the better for Bitcoin price. While Bitcoin price is showing some bullish momentum in the short term after positive CPI data, the larger challenges of centralized exchange insolvencies, looming crypto legislation, concerns of Binance's reserves, and potential contagion stemming from the digital currency group's legal issues could place a damper on BTC's current rally.
It's never the end of the world. People say, well, nobody's ever going to come back into this market. Well, I've been around. I've been around the block a long time. I've been 30 odd years in financial markets, and I've seen this with hedge funds. Long-term capital management, the biggest blow up of a hedge fund in history, the Fed had to bail out the whole system. What everybody shouted at them, they're a Ponzi, they're a scam, they're over leveraged. Hedge funds are uninvestable. Net outcome? The net assets of hedge funds went up 5x over the next 7 years. Why? Regulation. Regulation appears to have cleaned up the space, and then people feel much safer to come in because the institutions are waiting. And I've had conversations throughout Raoul's Adventures in Crypto, both with hedge funds like Olaf Carson-Wee, with Jeff Dorman. I've also had it with people like Yuri and Timmer. I've had it with Sandy Call, and everybody tells us the institutions are still looking at this space. So my guess, regulation and an upswing in prices, upswing in global liquidity, and they start coming in a more meaningful way. There tend to be momentum chasers. Also, we saw similar after Madoff. Hedge funds are uninvestable, they're opaque, nobody knows what they're about, nobody's going to ever put money in them again. What happened? I think the hedge fund industry went up another 5x in assets under management. So that's what I'm expecting here. Regulation equals safety equals green light equals go. If that coincides with global liquidity, it creates fireworks. And the market has no short positions in. It has no real ability to short unless you want to use Binance. And nobody really wants to use Binance because everyone's a bit scared of who owns it, its opaqueness, even the audits. And so therefore, you've got very few shorts and you've got a massive amount of money coming into the market. And stuff like ETH is deflationary the more volume there is. So the more volume there is, the less ETH's around, the more kind of reflexive in price it is. So I think we're setting up for a super interesting cycle. So I am been buying any money I can find. I'm throwing into crypto, literally in nothing else right now. I'm super focused.
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.